Let me ask you something before we begin. If someone told you right now that there is one asset, one single store of value that has survived every empire, every war, every financial collapse, every currency crisis in the last 5,000 years of human history, would you pay attention? Or would you scroll past it, the way most people do, and keep doing what everyone else is doing? My name is Zara, and I want to be very honest with you today. I am not here to sell you something. I am not here to give you a shortcut or a magic formula. I am here to have a conversation with you that most financial advisors are too afraid to have because it challenges the very system they are paid to protect. So take a breath, get comfortable, and please stay with me through this entire video. Because what I am about to share with you is not hype. It is not theory. It is a lesson that took me years to understand, and once it clicked, the way I looked at money, wealth, and the future completely changed. Let me take you back about 12 years ago. I was sitting in a small apartment. I had just started earning a decent salary. I was proud of myself. I had a savings account. I was putting money into mutual funds. I was doing everything the world told me to do. I was being responsible. I was being smart. And then one evening, my uncle, a quiet man who never talked much about money, sat down next to me at a family dinner. He looked at my excitement, the way I was describing my savings plan, my investment portfolio, my future dreams, and he just nodded slowly. Then he said something that I did not understand at the time. He said, "You are building a house on sand. Everything you are building is priced in something that is being destroyed every single day." I thought he was being old-fashioned. I thought he did not understand modern finance. I smiled politely, changed the subject, and went back to my plans. 5 years later, I watched inflation rise. I watched the purchasing power of every rupee, every dollar, every unit of currency I had saved quietly shrink. I watched my savings account grow in numbers, but shrink in reality. And I sat there, staring at my phone, thinking about what my uncle had said. He was not talking about stocks. He was not talking about real estate. He was talking about gold. He had been quietly accumulating gold his entire adult life, and while I was watching numbers on a screen, he was sitting on real, tangible, time-tested wealth. That was the day I stopped dismissing the conversation about gold, and I started listening. Now here is why I am telling you this today. Because I know that most of you watching this are in exactly the position I was in 12 years ago. You are working hard. You are saving. You might even be investing. But there is a significant chance that you have never seriously considered gold as a core part of your long-term wealth strategy. And that, my friend, is a dangerous gap. Not because gold is the only answer to everything. Not because gold makes you rich overnight. But because ignoring gold entirely, especially in the world we are living in right now, means you are leaving one of the most powerful forms of wealth protection completely off the table. And in this video, over the next several parts, I want to walk you through exactly why that matters. I want to talk about what gold actually is, beyond the jewelry, beyond the tradition, beyond the surface-level conversation most people have about it. I want to talk about what it represents, what it protects, and why the world's most sophisticated wealth holders have never, in 5,000 years of recorded history, ever fully walked away from it. But before we go deeper, I want you to understand something foundational, something that will shape everything else I say in this video. We live in a world where everything we are taught about money comes from institutions that benefit from keeping you inside a very specific financial system. Banks benefit when you keep your money in their accounts. Governments benefit when you trust their currency. Investment firms benefit when you buy their products. And none of these institutions will ever sit you down and say, by the way, there is something outside of our system that has protected wealth for millennia. Go look at that instead. That is not how the system works. The system keeps you inside. And inside the system, gold is often dismissed, minimized, and made to look like something only paranoid people or old-fashioned thinkers care about. But here is the truth. Here is what the data, the history, and the simple logic of economics will tell you if you are willing to look clearly. Every single fiat currency in human history, meaning every currency backed by nothing but a government's promise, has eventually failed. Some took decades, some took centuries, but none of them lasted forever. Not one. And throughout all of those failures, gold held its value. Not perfectly, not without volatility, but across generations, across centuries, across the complete rise and fall of empires, gold maintained its purchasing power in a way that no paper currency ever has. That is not a conspiracy theory. That is history. And right now, in the world you are living in, with debt levels at historic highs, with inflation reshaping the cost of everyday life, with currencies being printed at unprecedented rates, the question is not whether gold matters. The question is whether you are paying attention. We are just getting started. And I promise you, by the end of this conversation, you will see gold, wealth, and your own financial future in a completely different way. But for now, I want you to sit with this thought. The biggest financial mistakes people make are never dramatic. They are quiet. They happen slowly, over years, through neglect, through not asking the right questions, through trusting the loudest voices instead of the oldest lessons. Ignoring gold is one of those quiet mistakes, and quiet mistakes have a way of becoming very loud regrets. Most people think gold is just a shiny commodity, something that goes up and down in price. But that thinking misses the entire point. Gold is not just a commodity. Gold is memory. It is the financial memory of humanity. It is the one thing every civilization returned to when everything else failed. Here is why. Money is built on trust. You accept paper currency because you trust others will accept it too. But that trust can be broken, and the most common way it breaks is through inflation. When governments print more money, each unit you hold becomes worth less. Prices rise. Your savings quietly lose their real value. Gold cannot be printed. It cannot be created from nothing. Its supply is limited by the physical world itself. No government decision can change that. And that is exactly why it has survived every financial system ever built. In 1971, the world moved away from the gold standard. Currencies became backed by nothing but government promises. Since that moment, the US dollar has lost more than 90% of its purchasing power. Meanwhile, gold has risen from $35 per ounce to well over $2,000. Not because gold became magical, but because the paper measuring it became weaker. Gold does not make you rich overnight. That is not its job. Its job is to preserve what you have already built. It is not a growth engine. It is a foundation. And without a foundation, even the strongest financial structure eventually falls. The wealthiest multi-generational families in the world quietly hold physical gold, not as speculation, as protection. There is a reason that wisdom has been passed down for centuries. The question is never, should I put everything in gold? The question is, why would I have absolutely nothing in gold? Let me tell you about the 3 most common mistakes people make, and I want you to be honest with yourself about how many of these apply to you right now. The first mistake is trusting the number in your bank account as a measure of real wealth. Your account might show 50,000, but the real question is, what can that 50,000 actually buy today compared to 5 years ago? If the answer is less, and it almost always is, then you are losing wealth while believing you are building it. Nominal growth is not real growth. Purchasing power is real growth. The second mistake is assuming that stocks and real estate fully protect you from currency devaluation. They do not. Stocks and real estate are priced in currency. If the currency is being devalued, your gains may look impressive on paper while hiding a quiet loss in real terms. This is one of the most misunderstood concepts in personal finance, and almost no one talks about it clearly. The third mistake is waiting for a crisis before taking gold seriously. Most people only look at gold when markets are collapsing, when inflation is already painful, when the news is full of fear. By then, the price has already moved. The time to build a position in any protective asset is before you need it, not during the emergency. Think of it like buying a fire extinguisher. You do not wait for the fire. Here is what all 3 of these mistakes have in common. They come from a mindset that is focused entirely on the present, on what feels comfortable right now, on what everyone around you is doing. Long-term wealth thinking requires a completely different lens. It requires asking not just, where will I be next year, but where will the value of everything I own be in 10, 20, 30 years from now? Gold forces you to think in decades. And that is exactly the kind of thinking that separates people who build lasting wealth from people who simply move money around their whole lives without ever truly protecting it. Now I want to get practical with you. Because understanding gold philosophically is one thing. Knowing how to actually think about it in your own financial life is another. First, understand your purpose. Gold is not meant to be your entire portfolio. It is meant to be your anchor. Most serious long-term wealth thinkers allocate somewhere between 10 and 20% of their overall wealth into gold. Not as a speculation, as a permanent, stable foundation beneath everything else they build. Second, understand the difference between physical gold and paper gold. There are gold ETFs, gold certificates, digital gold products. These have their place, but they are not the same as holding physical gold. Physical gold exists outside the financial system. It does not depend on a bank, a brokerage, or a government remaining solvent. In a genuine financial crisis, that distinction matters enormously. Start with physical gold. Understand what you own before you move into financial instruments. Third, think in terms of purchasing power, not price. Stop asking, is gold expensive right now? Start asking, what will this store of value protect over the next 20 years? The price you pay today matters far less than the function it serves across decades. People who bought gold at what seemed like a high price years ago are deeply grateful today, because they were not speculating, they were protecting. Fourth, be consistent. The most effective approach to building a gold position is not to try and time the market. It is to accumulate gradually over time, a fixed amount every month or every quarter, regardless of price. This approach smooths out volatility and builds your position steadily without the emotional stress of trying to predict short-term price movements. And finally, tell your family. This is something almost no one talks about. Generational wealth is not just about accumulating assets. It is about transferring wisdom alongside those assets. If you understand why gold matters, make sure the people closest to you understand it too. Wealth that is not understood is wealth that gets lost in a single generation. Gold is not just a financial decision, it is a mindset. It is the decision to take the long view in a world that is obsessed with the short term. We have come a long way together in this conversation, and I want to close with complete honesty. The world is changing fast. Debt levels globally are at historic highs. Governments are spending in ways that were unimaginable a generation ago. Currencies are being created at rates that would have seemed irresponsible to any economist from the previous century. Inflation is not a temporary problem. It is a structural feature of the system we are living inside. None of this means the world is ending. I am not here to frighten you. I am here to make sure you see clearly. Because here is what actually happens to people who ignore all of this. It does not happen dramatically. There is no single moment where everything collapses. What happens is gradual and quiet. Over 10 years, over 20 years, the purchasing power of everything they saved slowly erodes. They look at their account and the number looks similar, but what that number can actually buy has shrunk. Their retirement does not go as far as they planned. The lifestyle they worked their entire life to secure becomes harder to maintain. And they cannot point to a single moment where it went wrong, because it went wrong slowly, quietly, the way all the most painful financial mistakes happen. Gold does not guarantee you will be wealthy. Nothing does. But gold, held thoughtfully, as a real part of a real long-term strategy, gives your wealth a fighting chance against the one enemy that no stock, no savings account, and no government promise has ever fully defeated: time and inflation combined. My uncle understood this, not because he was a genius, but because he respected the lessons of history more than the noise of the present moment. I want that for you. So here is your clear takeaway from everything we have discussed today. Start the conversation. Not tomorrow, today. Look at what percentage of your total wealth is held in something that exists outside the paper system. If that answer is 0, you have important work to do. Do not wait for a crisis to make you take this seriously. The crisis is not the warning. The warning is right now, this moment, this video, this conversation. You have heard it. Now the question is, what you will do with it. My name is Zara. Thank you for staying with me through all 5 parts. That patience and that willingness to learn is exactly the mindset that builds real, lasting wealth. Stay thoughtful, stay protected, and never stop asking the questions that the system hopes you will ignore.